Monetary Policy Committee's minutes really sounded a tad more hawkish than the RBI policy statement on February 7th. And the panel has largely worried about the global commodity inflation and the Fed's tightening to cast an upward pressure on Indian inflation. Now, the members are also concerned about non-food inflation and remain committed to achieving 4% inflation. Lata Venkatesh is right here to take us through all those details and add to the perspective. Lata.
Well, that about sums up the worries of the Monetary Policy Committee, starting with the governor. These are the three worries. Non-food, non-fuel inflation in India being rather stubborn. Food inflation, as the governor himself points out, you should see through, because sometimes vegetable inflation rebounds very sharply. That has been the Indian experience. Also, rural wages are rising. But the bigger problem really is that global crude and commodity prices are rising. Also, he doesn't seem very much worried about growth. He thinks remonetization, cut in interest rates by banks, and the budget will keep the growth story ticking. So you don't have to give rate cuts to help growth. That story will play out on its own. Hence the shift to neutral from accommodative. Viral Acharya sounds a little less hawkish than the governor, but here he also is largely worried about global factors. He says the US border tax, the likely 20% border tax, will keep the dollar strong, and that also will have an impact on funds moving out of India. The risk of rising worldwide inflation is what he's worried about. But more importantly, as money portfolio funds move out of India, the worry will be, is the Indian Reserve Bank committed to the 4% inflation story? If not, there could be some destabilizing outflows, especially in a situation of strong dollar. That's his main worry. Probably the most hawkish statement comes from Michael Pathar, the executive director of the Reserve Bank, who is on the MPC. He says that if you take out food, then actually CPI inflation was at 4.8 and not at 3.2, as the last reading indicated. 4.8 is as good as 5%, and the RBI Monetary Policy Act mandates that the committee should take inflation to 4. They can't be deviant beyond a point, and therefore his vote is also for a neutral stance. Chetan Ghate, again, one of the more hawkish members, but not belonging to the RBI, the external committee member, same reasons that non-food inflation has remained very sticky, and the reduction of the Fed's balance sheet, because it will not reinvest the interest, will create even more stronger dollar, and that pressure has to be will have an impact on the global risk premium. Pami Dua, the other member, also worried about non-food inflation, global factors, and likewise with Mr. Ravindra Dholakia as well, though in his case he's also worried about state budgets being a bit less adhering to deficits and therefore creating an inflationary impact. All told, I think the market will read this as at least as hawkish as the monetary policy statement itself. Already you saw bond prices fall, and there may be a little more of bond price fall tomorrow as a reaction to these minutes.